Welcome to another edition of Focus on Alternatives, brought to you by ADISA, the Alternative and Direct Investment Securities Association. For more information like this, please visit adisa.org and check out the resource library. My name is Greg Moz. I'm your host today. I'm joined by Adriana Olsen. She is National Sales Manager and SVP at Pasco Companies. Thank you for joining us here today.
Thanks for having me, Greg.
Want to talk about sponsors, quality sponsors that have been in the alternative investment space for a long time. What are the attributes of a quality long-term sponsor?
Sure. Yeah, I've been in the industry for almost 22 years, so I'm coming up on my 22nd year. And I will tell you what I've seen to be successful for sponsors is, one, a commitment to the space. So in my almost 22 years, I've seen a lot of sponsors come in and out. And when it's good, you get a lot of sponsors coming in. When it's bad, you get a lot that leave immediately. And so I think first and foremost, being committed to the space, being committed to the investors is paramount.
Absolutely.
Secondly, I think it's really good to stay disciplined in what your craft is or what your specialty is. And that may be a sponsor that buys multiple asset classes, but I think it's really important to stay disciplined to your beliefs and how you underwrite, and also to stay conservative. I think a lot of times we all know investors want the highest yields, understandably so, but I think it's really, really important in good and bad times that a sponsor remains consistent in their underwriting, conservative in their underwriting, and really sticks to what they're best at.
So that was a perfect foundation, talking about sponsors. There's different types of sponsors out there. There's real estate sponsors, private credit sponsors, oil and gas sponsors, and in some of those broad categories, there's kind of subsectors. Is there specific traits? I believe y'all are in the real estate sector with a focus on 1031 exchanges and DSTs. Is there some type of particular quality of a DST sponsor that you want to highlight?
Yeah, I think what I've seen is that a lot of real estate companies come into the Delaware Statutory Trust space and they don't know how to manage investors. So they know real estate, but they don't fully understand how to manage the DST investors. And I think that's a common footfall for sponsors coming in, is really understanding what kind of communication they need, what kind of reporting they need, who the investor is. You know, knowing your client is 90% of the battle, in my opinion.
Okay, so let's break that down further. We're talking about DSTs. Is there certain asset classes that are better for DSTs and staying in the space longer? Or is it best to have a focus? Is it best to have multiple asset classes? Does that play into this?
Yeah, so the DST structure sort of prohibits certain asset types because it has to remain passive, because we can't have capital calls. So I would say there are some asset classes that maybe fit better in the DST, but it goes back to sort of how you structure it, how you underwrite it. I think assets that maybe have diversification within the asset are really great. So
can you break down, give us some
sure.
examples?
An example of that would be multifamily apartments, so that you have 300 units or 300 residents or tenants in that property. And so it allows for a more stable income, because if you lose 10 tenants, your cash flow isn't going to be adversely affected. However, if you had a little strip center where, maybe you only had 4 tenants and 2 of them left, there went 50% of your income. And so that the investor's cash flow would be greatly affected. So I would say that's a good example. I would also say that some asset classes that are less capital intensive. So because we can't do a capital call, because those reserves are limited in what you can put in up front and then ongoing, taking on a massive value add structure may not be the best idea in a Delaware statutory trust. Also, it has to be passive per the IRS, so we can't build a structure that wasn't already there. So again, you're sort of limited to what the IRS allows you to do in the DST.
Okay, what about triple net properties?
I think triple net properties have a place in the DST space for sure. I think that as we've seen recently with Walgreens and Rite Aid and their ratings going down, you have to be careful. You want to make sure that there's a really strong corporate backing behind those triple net lease properties. But I think there's a place for those in the DST world.
What are some of the benefits of working with a long-term sponsor?
Hands down, track record.
Okay.
When you're working with a sponsor that has been around for a long time, you get to see not only how they handle the good times, but more importantly, how they handle the bad times. And that's where you're going to see the strength of the company that you're working with or the sponsor. So how did they communicate in the bad times? What did their track record look like through the recession? Were they around in a downturn? That is, for me and my role, I think that's the hardest part to sort of articulate or value when speaking to a new investor, because they don't know what they don't know. And if you have a newer sponsor in the space, their track record might look amazing, but it's 4 properties versus 150 properties or 200 properties that have gone full cycle. So I think it not enough value is put on the track record, and nobody's perfect. So talking about the properties that maybe didn't go perfectly is where you're really going to see the strength of the company.
I like all of those points. Anything else you want to add to that? Like what are the contributing factors or any additional contributing factors to being a long-term, high-quality sponsor?
Reputation. So when you have built a reputation, a good reputation in our industry, then you can be conservative in your underwriting. You don't have to be the highest yield in the market, and you know that you're going to have investors because they know you and they recognize the product that you bring to the table. Sometimes when you're working with a newer sponsor, they have to have the highest yield. They have to have something really compelling for the investors because they don't have that track record. So you may see them get really aggressive in their underwriting because they have to have an attractive yield. And that may or may not work out, but TBD on that, right? So I think that's another sort of benefit of working with a company that's been around longer.
So we've talked about some of the good attributes there. What should advisors or investors be looking for, almost from a red flag, from a bad habits, in at that sponsor level?
Yeah, I think ask your contemporaries, who are they working with and why? If I were a rep, that's what I would be doing. I would find out who the top representatives are in this industry, who are they working with and why. You'd be surprised how many people want to share their knowledge. And I think that you will learn very quickly. And the red flags are a sponsor making decisions that are in their best interest, not in the best interest of the investors, poor communication or lack of communication, lack of transparency is really, I think, very much a red flag. And then just looking at the deal, go to the underwriting. It's math. So if they're growing their rent by a much higher multiple than their expenses, then that's a red flag. You're not going to see huge rent growth without seeing some pretty significant expense growth as well. So look at the numbers, see if it all makes sense within the offering, and then I would strongly suggest asking around and the more experienced registered representatives out there.
I agree with you. And, you can glean a sponsor's mindset and approach from their underwriting. You talked about just looking at the numbers. So you can see how aggressive they are, how detailed they are from looking at those performers. And that goes to their mindset, that goes to the culture of the firm. So I agree. That's a great point. And I mean, to summarize this, the sponsor should be really investor focused.
Yeah.
And then they should also be performance. And I guess when you have both of those, that contributes to a quality long-term sponsor.
Yeah, I go back to know your client, know who is investing with you and what they want. And problem solve before the problem is there for them, right? So we are
great
in
point.
a time where there's a lot of inclement weather going on. So send a communication out ahead of time saying, this is what the property has done to protect itself from that weather. And then let them know immediately after, how's the property doing? Imagine if that were you and you owned a property in Asheville, North Carolina,
Right.
and you don't know if it's still standing or how much damage there is, right? So getting those communications out, and as you said, communication is just, it's one part of it, but it really is an important part. And then the rest is in the details and how they underwrote, why they underwrote, ask the questions. And if they don't have good answers for you, then that should be another red flag.
Right. Completely agree. Adriana, thank you for sharing these insights. Really
My
appreciate
pleasure.
it.
My pleasure.
And thank you for watching another episode of Focus on Alternatives. Again, for more content like this, please visit adisa.org. Thank you.